think the economy is staying pretty resilient, considering that the Fed has raised rates as much as they have. And you have other central banks around the world, ex-Japan, that have also raised rates. I think what's puzzling to me is that the markets are trying to play, well, with the Fed, and they're not necessarily believing the Fed that they're going to continue to raise rates, and I think that is ill-advised. We've seen some downticks on economic reports. We've seen downticks with earnings. I still think that earnings estimates are too high for 2023. And there's going to be some more economic pain ahead, notably in unemployment rising. And we're at 3.4%. And to think that the market is buying, being bid up, believing it's possible that we'll have a recession. I think that it'd be technical. I mean, they changed the technical term of recession last year. But I think that it's possible that we can be in a recession, and it might start to reflect in third quarter. And that's, once you get there, it's always a soft landing until it's a hard landing. And
Right.
About it, when you're in an airplane and the airplane lands and it's like, oh, we made it. We're on the runway. We're good. It's a soft landing. But the brakes and the engines fail to stop the plane, and then it just goes right off the runway, and that's the hard landing. So it's when we get into a soft landing scenario and the recession's here and unemployment's ticking up, and if we get another dislocation in the market, then it becomes a hard landing. So it's for those that are saying, oh, we're definitely going to have a hard landing. I'm like, okay, let's just see where we go with that. And remember, if the Fed starts cutting rates, they're doing QT. They're trying to reduce their balance sheet. So that would sort of go against two policies working against each other. So I don't see that. I don't see rate cuts coming. But if, let's just say they stop QT and they start cutting rates, the economy could still be in a downturn, and the markets could still be suffering through more dislocations, even weaker earnings. Look, if unemployment goes up, then you're going to have a problem with a lot of different asset classes. You see consumer staples and discretionary start to weaken, car sales weaken, housing weakens. It makes it even harder to feed your family and find a new job, because the jobs are I think companies are hoarding workers right now, and until they need to start to lay off people, and we're not talking, Meta, they had a bloated amount of employees, but it's when just the people that you go to stores, your local restaurant, you start to see fewer people there. That's when things really start to they hit home. I think the hope in the market was that interest rates would continue to drop, and we saw a drop from the 10-year above 4%, and it recently dropped under 3.4%, and it's currently at 3.65%. You're starting to see another uptick in rates.
Little creep, yeah.
I think that the home builders are unique because they sold out of everything during the pandemic, and there was a big pull forward in demand for new homes, and so that was really positive for them. And they had low interest rates, and on the thought of low interest rates, I'll give the Fed credit on something, that they've created something that is absolutely a benefit to people and families, but it also created a problem going forward. And that's when you have ultra low interest rates for over 10 years. The majority of people that bought homes in that period have much lower mortgage rates than what they could get today, which that's great. In the previous periods, interest rates were higher, and when unemployment spiked, that really shook people out of their houses. They walked away from their mortgages, and that was, we know the end of the story there. But people are trapped in their homes right now. They can't get out of them because they have these low interest rate mortgages, and if they have a 3% mortgage and they're going to get a 6% mortgage, that's a pretty big number increase for a monthly mortgage payment.
Right.
So that's you don't have a lot of turnover either. So that when you don't have a lot of turnover, you're not really seeing the dramatic drop in prices. And there's still, I mean, again, with all these people locked in their mortgages in their homes, they are not putting their house on the market to sell because there's no mobility to move to a new house, because prices are still high. There's no supply out there. And I don't want to pay another, I don't want to pay 6% or more on a mortgage. So there's a bit of a stall happening in that area. That's why new orders dropped, cancellation rates dropped, and just that data that is reported every month. That is data that the home builders give to the company that tracks it, or it's a government source. But that's when someone or a family will put a deposit down or sign a contract on a new house. So when you have all these big cancellation rates, that doesn't get reflected in the new home data going forward. So it will probably be down a third of really what is being sold and what is turning over. So when you don't have turnover, it's just like a stock or a bond. If you don't have a lot of turnover, you're not going to see a lot of volatility in price. So I think the home builders also had high wages that they dealt with. They had high material costs that they dealt with. And that's an area where I'm watching for, in the jobs data, layoffs within construction workers. Because if unemployment starts to rise, I think it's not going to be a good sign for home builders or a lot of other assets. I think the Fed just makes it up as they go. They'd rather have the markets going up because there's less political flack on them, and they don't want to cause a depression. Okay, but again, inflation's going to stay higher. Consumers' bank balance sheets are going to decline. And then what's going to happen? It becomes more of a crash scenario for a lot of people. And trust me, anybody that loses their job, and then they can't find new jobs, that for them is a hard land.